Hey everyone, and welcome back to Everything Tesla Stock. If you're keeping up with the current stock market, then you probably have a bit of an idea of how shaky it is. Some of the greatest companies like Tesla have lost most of their investors, as they all sell their stocks to prevent counting losses. However, even with all of this, other investment companies like Ark Invest are still remaining pretty strong believers in Tesla. They're even saying that Tesla's stock is set to go higher than it already has gone, to even $10,000. But when and how? What exactly is their reason for this? Given the data that they've given to prove this, could it be accurate? Let's find out. Even with the current fall in the market, Tesla's managed to record highs in its Q1 2022 income report. Tesla reported a $3.3 billion net profit for the first quarter of 2022 on April 20th, 2022. This was a quarterly record that even exceeded Wall Street estimates. If you keep up with the stock market, then you've probably heard of Ark Invest's most recent stock projection regarding Tesla. Tesla's incorporated shares are set to quadruple to about $4,600 by 2026. This was according to Cathie from Ark Invest Management. Ark released its updated model on April 14th, which is more than 4 times today's pricing. Last year, Ark predicted that Tesla's stock would eventually rise to $3,000 by 2025. However, it has subsequently revised its forecast, mainly because of its fresh assumptions about the company's future robotaxi business and capital efficiency. But the real question is, what assumptions are these? How is it that Ark Invest is going to be able to come up with these numbers? Even as everyone around the world, including the government, is increasingly losing hope in Tesla's fully self-driving capabilities, Ark is still continuing to remain hopeful about it. In fact, they are now more hopeful about it than they were before, and because of this, Ark has included Tesla's potential robotaxi company in its latest value. According to Ark, by 2026, this could rise Tesla's shares up to $4,600. Not too long ago, the firm gave a previous analysis. They said that the share price would rise to about $3,000 by 2025, but now the firm predicts a price of about $5,800 by 2026. This would be even through the toughest times. To this effect, Ark has stated that even though their predictions for 2026 are calibrated, they still believe that the Tesla model is methodological conservative. They have assumed that Tesla's stock would trade like a miniature firm rather than a high-growth one in 2026. Before analysts determine a price target, they always consider a variety of essential aspects. Tesla's full self-driving capability and prospective robotaxi business has firms having mixed feelings about it, with some factoring into the price targets, while others do not. This may be mainly because the technology lacks features, even though CEO Elon Musk has repeated some promises that it would be ready by the end of the year. Even with all of Musk's overly upbeat social media tweets, there are still a lot of unknown variables regarding FSD's beta's progress and the possibility that Tesla will actually start a robo-taxi. Tesla's potential to construct and actually launch a network of self-driving robo-taxis is quite critical to making Ark's bullish thesis a reality. According to Ark's research, the network of taxis would offer self-driving services just like Uber. They will be transporting people to and from various locations, and according to Ark simulations, electric vehicles are expected to be the source of about 57% of the company's income by 2026. This would be at lower margins than the robotaxi revenue. Ark Invest actually says that the company's robotaxi operations will make up about 60% of its estimated value and more than half of its expected earnings in 2026 before interest, taxes, depreciation, and amortization are taken into account. When Musk was inaugurating Giga Texas, he stated that there was such a project in the works. But before we can look further into Ark's current price target, it's important that we recall that earlier iterations of Ark's prediction models caused a lot of skepticism among investors. For a long time now, Wood has been backing Tesla and its CEO Elon Musk. This month, the flagship Ark Innovation ETF reduced its stake in Tesla. However, even after doing this, the electric vehicle maker remains the firm's top holding. it actually accounts for 10% of its assets. Back in 2018, Ark CEO Cathie anticipated a price objective of about $4,000, which is about $800 after a 5-to-1 split, before the enormous stock price increase of the pre-split run-up. As of mid-April 2022, the Tesla stock price was at about $5,000 pre-split price, which was about $1,000 post-split price. In 2018, most individuals could not believe the price. It was very shocking indeed. In early November, Tesla stock managed to get an all-time intraday high of $1,243.49. The stock has been under quite a lot of pressure since the beginning of the year, and that's due to the macroeconomic concerns, component shortages, and input cost inflation, which were all caused by the war between Russia and Ukraine. However, through March and early April, the stock managed to make a recovery after it bottomed out in late February. Later on, after Musk announced his bid for Twitter, Tesla's stock price fell by 3%. Eventually, the shares landed at $985. If you had a $1,000 investment in Tesla shares at the most recent closing price, then you would have managed to wield about 1.2 Tesla shares by 2026. If the stock is kept for the next 4 years, and it actually makes it to Ark Invest's price goal, then the same stock is going to be worth about $4,692. We're talking about a 369.2% return on your investment. If you're looking at Ark's research, it's important to note that they use a statistical method to generate a variety of situations. Some of the inputs were used for these scenarios, and they include the number of automobiles sold and the average selling price of those cars, among other critical business variables. The results that they found were the probabilities of various situations. Based on these assumptions, the most important point to remember is that this strategy is almost completely predicted on Tesla's vehicle business and robotaxi prospects. However, there are a few items that are missing from this model, and those include Tesla's AI as a service robots that mostly looks human and the company's renewable energy business. Looking at it from Ark's point of view, it is quite reasonable not to include these business components when talking about 2026. This is because these components involve a high level of uncertainty that would just result in too much volatility in the model itself. For example, over recent years, Tesla's priority has been in the automotive business, and we might actually see this going on in the future. All this is primarily because of the battery's availability and scalability restrictions. Also in the solar industry, the solar panels still have to be put up by a third party, which makes scaling up even harder. According to Elon Musk, Tesla's software, including its AI training system, is open to licensing. However, it has no potential partnerships, and none have been announced just yet. In addition to that, the timescale for the humanoid robot is difficult to forecast. Tesla's gone through a lot of hardships to develop its vision-based AI for full self-driving, especially iterating on different models. At some point, it always seems like they have made a breakthrough. However, at some point, the vision-based AI that Tesla's working so hard to develop for its cars is going to be too heavy to lift for the humanoid robot. So basically, without AI vision, there would be no robot. Even with all of this going on with Tesla, Ark Invest still remains pretty convinced that Tesla stock's got a lot of room to rise. According to Ark's bull case scenario, the firm could generate up to $485 billion in annual income through this system by 2026. Ark is estimating that Tesla's robo-taxiing network has got the potential to generate about $51 billion in yearly income alone. This is the worst case scenario, but in addition to all of this, Tesla produced about $54 billion in revenue in 2021 alone. This was mainly from the scale of its electric vehicles. However, this leaves the investors with one main question: when will Tesla be able to sell fully self-driving cars? Let alone a network of self-driving taxis that can go between villages, cities, and countries. Looking at Ark's worst-case scenario, they estimate that a self-driving taxi network would most likely be operational by 2026. The Ark Investment Management Company said that not only have the commercial releases of the Waymo and Cruise bolstered our present outlook, but they also have fundamental improvements in AI. According to the midpoint of their calculations, Tesla will begin commercializing autonomous ride-hailing in 2024. Given Ark's positive outlook for Tesla shares, it's quite clear that the electric car company is the investment manager's top holding across all of its ETFs. The data from Cloyfin shows that Ark owns about $1.43 billion in Tesla stocks, which makes it the only stock in Ark's flagship ETF with a positive performance over the last year. It is quite evident that Ark Investment, led by CEO Cathie will always support Tesla no matter how long it goes. They will also stand by the company and will always have high hopes for Tesla. So, what do you think about this? Let us know down below in the comments. Do you think investing in Tesla is a worthy investment? Also, while you're here, go ahead and click on one of these two videos on your screen. See you there.